Good afternoon, and welcome this afternoon to Think Scripting, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend James Boyd, otherwise known as JB. He's a 20-plus year veteran of the financial markets, even though that would make him, 8 years old when he started, thereabouts. But I'm glad to have James here with me, helping to answer those questions along the way and have those conversations continue to work. And if you are here with us live, be a part of the conversation, chat in those questions you might have. James will be there to help answer those. If you're watching this on the recorded version, by all means, leave us a comment in the comment section, and we'll get to those comments as quickly as we can. So I'm filling in for Mike Fairborn today, who is out of the office. So as we often do, when one another of us is out of the office, we'll fill in places where we need to. Now, I will tell you this at the very beginning. My Think Scripting skills are probably not the equal of James Boyd or of Michael Fairborn, but I know how to do it, and I know some of the things that you can do with it. So we're going to talk a little bit about it from that perspective today as we get into this discussion. A couple quick housekeeping items. Remember that everything we talk about so for illustrative and educational purposes only, and is not a recommendation or advice about any particular security or strategy or anything else. Remember, if you're trading equity and index options, remember they carry a high level of risk. They're not suitable for all investors. Make sure that you read and understand the risks and characteristics of standardized options before considering any option strategy. Make sure that you're aware of those considerations. Now, we're probably not going to talk about option content in this discussion today. However, it's a good idea to always keep that in the back of your mind, those risks associated with trading options. Now, we're going to use technical analysis as part of this discussion. In fact, it's the genesis of this discussion today specifically. But remember that Schwab doesn't recommend the use of technical analysis as a sole means of investment research. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of the Thinkorswim desktop platform. Now, the paper money version, great learning environment, doesn't guarantee future success. However, it is a good practice area. There are some things that it does not do that a live trading account will do. One of those things is it doesn't facilitate the use of studies to create stop orders, and it doesn't facilitate the use of studies to scan for stocks. Now, we're going to be talking about stop orders, and one of the ways that the particular script that I'm going to discuss today can be used is as a means to generate or create a trailing stop. And so, because of that, recognize that as you move your practice from paper trading to live trading, some things may change. So be just aware of those circumstances. Remember that investing involves risk, including more than your initial investment in some products. Remember, past performance of any security strategy doesn't guarantee future results or success. So let's jump into this discussion here really quickly as we get started this afternoon. And I'm going to pop over here to the Thinkorswim desktop software platform. And I want to give you a little bit of a backstory here in terms of the genesis of this discussion. The backstory is this. I was teaching a virtual branch workshop earlier today. And the conversation in that virtual branch workshop was about the idea of managing risk. And one of the questions that came up, and one of the discussions that came up, was the idea of managing risk through an automated stop process versus things like levels of support and resistance and just using a stop. And I know that there are a lot of different ways that we can manage risk. James teaches using callers as a means to manage risk. I've taught that before. We've taught protective puts. Lots of different ways that you can approach that idea of managing risk. But it always kind of pivots back to this question, and I get this a lot when I teach live events, as I'm teaching about stop orders. Can I just use a trailing stop? And the answer is, yeah, you can. But one of the challenges in using a trailing stop is, as a matter of course, because a trailing stop is simply a mathematical ratcheting level, it ignores, by necessity, simply by mathematical necessity, levels of support and resistance that exist. So I started thinking about this today in this discussion, and I thought, well, the slides that I have that I'm using for this virtual workshop, which were created by graphic designers, have this kind of nice, cool line on the chart that follows the price level at which that trailing stop was. I'm thinking, wow, that would be really useful in planning and evaluating whether or not a trailing stop was at or near a level of support that might be a situation where you need to maybe adjust that stop a little bit because of the possibility that the price of the stock hits the support level, triggers your stop, and then bounces off of said support level, and that becomes frustrating. Now, it's not a terrible position to be in, because at the very least, you've gotten out of the trade if it's been going down. At the very most, you then have to re-enter the trade. Now, that could create some circumstances that you might have to deal with. But at the same time, it would be nice to be able to see that line plotted. So, to give you kind of the genesis, there are a couple of different ways. I went to the studies to try to find something that I could use. And to be fair, I was not exhaustive. This was today. So I was not exhaustive in my study. So one of the things that I thought about was, well, I could just plot a moving average. I'm just going to take a simple moving average. And I know James uses other types of moving averages. I'm going to use a simple moving average here. And I'm just going to make this, say, for instance, a 30-period simple moving average. And I'm just going to plot that on the chart at that level right there and click on apply and OK. So now I've got that 30-period simple moving average, and I could say, hey, that's maybe a level of support that I could use as a trailing stop. And in fact, in a live trading account, we can use a moving average as a trigger for a stop. We can do a study-based stop. In paper money, you can't do that, which is fine. The problem with the moving average, if you're using that moving average as a trailing stop or as a study-based trigger, is when it starts to pull back in a circumstance like this, you run the possibility of that trailing stop ratcheting back down, or the stop level at that level kind of ratcheting back in a downward direction. And the idea behind a stop is that it protects you from yourself kind of justifying, I'll just give it one more day, or I'll just give it a little bit more of a pullback, because then maybe it'll turn around. And then you end up riding that bus all the way south until you get to a place that you don't want to be. So I thought, okay, well, we could even do this, and we could use something like a moving average. I'm going to use a moving average envelope here. Average envelope. Actually, let's do this. We'll type envelope. There it is. Moving average envelope. And I'm going to put a moving average envelope on this. And I'm going to say, all right, let's make that a 30-period moving average. And I'm going to go, let's say, I'm just going to plot the below line, and I'm just going to put a moving average at 8% below that moving average. So I'm going to click on OK and apply. And there's that line, which is 8% below the moving average. And obviously you can change that, right? So this creates reflective moving average lines just by using that study that are a fixed percentage away from that moving average. And again, the simple problem exists that the moving average envelope line, while effective in helping to trace, kind of a range, also backs off a little bit. So I'm thinking, okay, well, there are probably other types of channels, but I'm thinking if I really want to do this, I want to look at this from that perspective of using the trailing average ratcheting mechanism. So I started to think about creating a script, and I created a script. So I've already done that. I just want to walk through this as we go through this and kind of plot how this works. So I will show you what it does first. Then we'll go back to the script and take a look at it. And then I'm going to break it down by its individual sections. Now, I will just say this. Like I said before, I don't purport to be, I don't pretend to be a master ThinkScript coder. Many of you are very likely more sophisticated in the way that you code script than I. I don't even claim to play one on TV. But I do know some of the basics, and we've talked about that as I've taught this class over the years as a backup to Michael Fairborn a couple of times in the way that we use some of the tools available in ThinkScripting and in the Thinkorswim platform to be able to create that script. So what I'm going to do is I'm going to come back over here and I'm going to go to my study icon and I'm going to take off those things that I just put on here, that simple moving average and that moving average envelope, because we know to try to get to what we want to do, those aren't going to really work because they have that potential to recess from previous price levels. Okay. So the script that I created that I called Trail Stop Select Custom, that's the name that I use to name this. And I'll make that visible and I'll show you what it looks like first, and then we'll delve into the code. And Jim, you're absolutely right. 100%. I would agree that there are many AI tools out there that will do this, because that was the initial genesis of AI tools, AI models to begin with, was as code generators to help massive lines of code being written. And so being able to prompt that AI, and that's a skill in and of itself, being able to prompt the AI tool into writing and then debugging the script, the AI script, or the ThinkScript. So here's what it called. It's called Trail Stop Select Custom. And I'm going to click on Apply and OK. And so what this does, what this ThinkScript that I created does, is it simply creates a plot at a selected either dollar amount or percentage amount. Now, one of the reasons I kind of settled on dollar and percentage is because that was part of the conversation that I was having in that virtual branch webcast that I was teaching, because I was talking about methods in which you could set a trailing stop. And the two that we discuss in that particular environment are setting the trailing stop at a particular dollar amount away from the price, or at a particular percentage away from the price. So in creating the script, I wanted to get to that ability to input whether I could choose or select dollar offset or percentage offset, because that's very similar if we were creating an order to creating a trailing stop and using that trailing stop as a means to adjust the stop level based on percentage or based on a dollar value. Or particular specific dollar value. So that's kind of where it came to this. So I'll show you what it looks like. And again, this is the plot that shows it. And there's one other line that's plotted here, and you can't really see it very well. But it's got two other components here. One of the other components is this label up in the top left that tells me at any particular point what this current stop level is. So right now, that current stop level is at 281.18. And that 281.18 is based off of this first plot that you can't really see here. And that first plot that you can't really see is this kind of light green line that is taking the high closing price. Now, I just did that by default because that's one of the things that I wanted to kind of explore in this discussion. And as I'm looking at this is, you can see what that's plotting to. That line is plotting to the closing price, and it's taking the most recent highest close as its adjustment function as it continues to move. So what happens is you notice right here, here's a high close, and then we get a lower close, and we get a lower close, and we get a lower close. And so from that particular point on, that line never adjusts higher until we get a new higher close. So at the same time, even though that high close is coming down, it's never adjusting the trailing stop lower. That's the basic mechanics of that ratchet function of a trailing stop. So it's using that basic function. So even if we get a recession of that high close, that close continues to move to the downside, it doesn't ratchet the stop down. And then you can see that when we get a new high close relative to this one right here, that's when we get an adjustment up in the stop. And it's, in this particular case, the way that this is written is near closing price real time. So this is going to be based on a closing price. So this is going to adjust each day. It's either going to adjust up if there's a new closing high, a new high close, or it's going to stay the same if there's not a new high close on a daily basis. So as I put this into a script, here's how I kind of wrote the script. The sections that I need. I knew I needed an input. I knew I needed a variable declaration. So how do I define the trailing value and the highest high? What do I define those as? And then how do I calculate that highest high? And how do I keep it from ratcheting back down? And then how do I plot that high, and how do I plot the trailing stop? So I'll show you the code here, and then we'll kind of go through the sections. So I hope that you find this useful. The reason I thought this might be useful, again, because the conversation was started, is if I'm coming in and I'm drawing levels of support and resistance, and I'm drawing those levels of support and resistance based on, what I see happening on the chart. I might argue that, hey, there was a level of resistance there. If I've got a trailing stop like this circumstance right here, where that trailing stop is just above, oops, I kind of lost that. Let's find it. There it is right there. Where that trailing stop is just above that level of support. That's what I'm looking for right here. That trailing stop is just above the level of support. This is certainly a circumstance where price, if it were to make a big move, could come down and get triggered down on the trailing stop and then bounce up off of the support level and then move higher. Now, to be fair, you could make the argument that anytime you've got a trending stock, you could draw some kind of trend line at some level that would function as a technical level that might be a point for a bounce, that it would invalidate the reason for having a trailing stop, that it's just going to bounce off that level and continue to go higher unless it doesn't. And then you want to get out. But this kind of helps, I hope, to kind of adjust for some of the frustration that some traders find in a matchup or kind of a confluence of a level of support that exists, or maybe exists, theoretically exists, and a level of a trailing stop. So when those two are close together, you could maybe adjust the trailing stop a little bit lower. You could adjust the trailing stop a little bit higher. You could take the trailing stop off, for instance, whatever you wanted to do in that particular circumstance. So it's really kind of that process of creating this study to just simply plot a line. And that's really all this is doing, is plotting a trailing stop line. Now, what you choose to do with it beyond that, that's up to you. If you wanted to make this a strategy that you could test, you could do that and use this as part of a strategy-based study that would say, fine, trigger me out of the trade if that happens. So that being the case. And so I'm going to go to the Flask icon here. And here's our trail stop select custom. And I'll share this with you, of course. But I clicked right there and I created this code. Now, I actually, to be honest, I started this. Let me do this real quick. I'm going to share this code. I'm going to go ahead and click on share. And I will put this out in the chat. Now, by the way, remember, anytime we share code or anything else, it is not guaranteed as to time or accuracy. And it is not a recommendation by any means. But James, I know, has a number of short videos that he's talked about. I know Barb's done some short videos on how you install those ThinkScript codes if you have not done so already. And I'll tell you what, if you look at the stuff that James does in like his investing masterclass series, it's really kind of a masterwork in using ThinkScript codes, say, for instance, in a watch list or on a chart. I think he does a great job with that. So if you've not been to one of James's classes, I would highly encourage you to do that, to join him for one of those classes. So I actually went initially to start this. I went over here to the Tools tab, and I went to the ThinkScript sub tab. And I just started to build this, and I just started to write this out. I knew that I needed to create the input parameters. And so that's what I did first. And I just kind of commented out. So using that hash mark or that hashtag or the pound sign, I commented out what I was doing. So trailing stop line based on dollar amount or percentage created for ThinkScript. And then I wanted to put in my input parameters. And so that's where I started, was going to those input parameters and kind of breaking this down. So I'm plotting my data to the closing price. That's kind of the first step. And that's by default put in there. You can always change that definition. I know Mike has talked about this before, but I just left that in there. That comes in by default when you start a new script. So then I started writing in here my input parameters. And so I did input trail type. And that's coming from the list of functions over here, trail type. And then I defined what that trailing type was. Default, either a dollar or a percent. And so I have that opportunity to change that trailing type. What type of trailing stop measurement am I using? Am I using a dollar type amount, or am I using a percent? Now, if I wanted to refine this a little bit, I could add something else in there. I could add a step mode. I could specify a particular price. I could specify one or the other if I wanted to just simplify it, not give that choice or that option to choose dollar or percent. So the input trail amount, dollar amount or percentage, so my increments are 1. I could make that more granular if I wanted to in terms of this input. And then my input price is the close and the price type to base the trailing stop on. So I'm basing this on the closing price. If, on the other hand, wanted to base this on, say, for instance, the high or the low, or some combination of those, I could choose all of those different definitions in terms of those prices to change that. I could change it to high, low, or custom expression. I could try to find the midpoint, right? I could take the high plus the low and divide it by 2 and use the midpoint of the candle as a means to determine the stop. But in this case, I'm just for simplicity's sake. Yeah, and you're free to decide. Absolutely. You can choose whatever you want. Right. So for simplicity's sake, I left this as the close. That's probably the most common definition of that data plot. So I commented this out, price type to base the trailing stop on. That's where it was. Now, we have to define our variables in this particular case. So the variable definition comes as this declaration. So I'm defining my trailing value, and I'm defining my highest high, right? So trail value, that function, and you see that it's repeated down here, that trail value function holds the calculated trailing stop level. It's whatever that high is, and then subtracting whatever this trail amount from that trail value. And that's what plots the line. Now, highest high is defined. Now that's our next calculation that we need to define. So this next section that I wrote in this particular case is going through initializing that highest high. How do we define what is the highest, or in this place? So think about when this says highest high, it's not really the highest high, it's the highest closing price, because our price is defined as our close in this particular case. So we're taking the highest closing price, even though the function is highest high. So remember, we've got price equals close, and then highest high equals price in this calculation. So we're going to say, all right, if that highest high is that highest high or highest close, then plot that line. Else, don't change the line. It's this if then else statement. It's this else component that keeps that highest high at that measured level instead of letting it ratchet down. So this is kind of the ratchet portion, if you will. Now, we go to the next subset, and that is calculating the trailing stop based on the input type. So we can choose whatever that trailing type is. Remember, we defined that input up here. whatever that trailing type is, whether it's dollar or percentage. So in the case that it is a dollar, we're taking a dollar amount, we're taking the trailing value. That's defined up here. That trailing value equals the highest high minus the trail amount, okay, minus the trailing amount. That gets us to that dollar function. Now, right here, the trailing value, if in case our switch is percent, the trailing value is the highest high, which we know is the highest closing price, not the highest high, but it is the highest closing price because we've defined that up here. That then is a percentage function. And all I did is I took the trailing amount. So whatever percentage amount I'm inputting, and I convert that into a percentage. 1 minus the trailing amount divided by 100 is going to give me that percentage amount, and I times that by the highest high, and that's what gives me the offset from that high close, okay? That high close. So in this particular case, all I'm doing in this section right here is helping to calculate that highest high calculation and the plot that it gets to, right? Where it plots that line. So some of the ways you could add this, or you could edit this. I could create, say, for instance, a minimum stop distance. So calculate trailing stop based on input time, and then we could put in here an input, and we could add in there something like a minimum stop distance. So that would be something like trail value equals minimum of the highest high minus the trailing amount minus 0.5. So you could cap that distance so that it's not going to drop below a certain level. But that's almost self-defeating because we're already starting to do that up here with the input to begin with. You could add, however, also in here a custom formula. So for instance, we could, and I'll just add this in because I kind of started to sketch this out. I'm not going to keep it in, but I could say trail value equals highest high let's see if I remember how I was doing this. Minus trail amount. Actually, I got a parentheses this one. Trail amount. There it is, trail amount. And times that by something like ATR, which is a study, ATR, and we'll just do parentheses and put in a 14-day or 14-period ATR, close the brackets on that. And now I've got that parenthetical that allows me to define that trailing amount by an ATR. So I could use that as a custom formula here as well. And we could even put that in as we continue to adapt this as part of one of those inputs. We could make that trailing amount a study-based input as well. But that's how you would go about doing that, is adding that additional component there. All right. Yeah, and good. And thanks, James, for answering that question. All right. Now, the next thing we need to do, now that we've got the calculations, is we need to plot that trailing stop line. So in order to initiate the plot on the chart, we use the word plot. And then we're going to plot that trailing stop equals that trailing value that's been calculated through this section right here in the variables, and then the initialization, and then the calculation. So the plot of the trailing stop is going to be whatever that trailing value is. Now, how could we edit that if we wanted to change that? You could plot a secondary stop. For instance, if you wanted to say, fine, if this trailing stop was broken by a certain amount, then plot another line as a secondary line. So you could do something like, let's do this just real quick in this conversation. Let's go plot trailing stop. Right there, trailing stop equals Actually, you know what we need to, no, I don't want to call that trailing stop because that would be redefining trailing stop. I want to do secondary stop. Secondary stop equals trail value. And we could do minus 0.5, minus 0.5, and do a trailing stop. I got to put another, there we go, in there, plot secondary stop as the trailing value minus 50%. So that would put another plot line below that trailing stop line. Now, you can use that if you want. You don't have to. That was just an addition that I was thinking that might be helpful if you wanted to plot, say, for instance, exit 50% of your position on the trailing stop, exit the rest of the position on the secondary stop. And you could do that by creating that secondary plot line. All right, now the next thing that we need to do here in terms of now that we've specified what the plot is and what determines what's actually getting printed on the chart is how that chart is styled. Now, I tell you this, James Boyd does a phenomenal job in his webcast and in his scripting in creating some phenomenally cool colors and candle repainting. I'm just barely scratching the surface on that stuff. I'm really starting to get into some of that now as I start to practice and build out this. So I'm just going with some basic stuff here in this discussion. So I commented it out as styling. How are we styling this plot? So trailing stop, we're going to set the default color. And in this particular case, I'm setting that default color as red. You can choose whatever color. You can choose an RGB color code. You can choose CMYK color code, whatever you want to pull off of the kind of standard. If you go to the change color component in any of the studies, you can pull those color codes off of that, and you can plot those here as whatever the default color is. And then I'm setting the default stop line weight. I'm setting that line weight as a default of 2. Now you can change that in the study edit box. You can change that line weight. And then I'm setting the curve style to be a long dash. So I want to have that long dash. Now, R1 asks the question. The way this is created is to be simply a line plot on the chart. That's really all it is. So you would have to then take that line plot and whatever that percentage is and create a trailing stop order that would follow. So yeah, manually. But there is also a way, if now that this is a study, you could use this as a study and that plot of the line as a definition for where to execute a stop order. But that would be kind of like doubling up. You'd be kind of going the back door around. It's like kind of creating like a Rube Goldberg machine to brush your teeth. Why not just use the toothbrush? So, but I mean, it's a great question to ask, because as you become more sophisticated in how you do this, that's one of the things that you may find yourself doing is looking at how you can make this tool more effective at doing something in a more automated fashion. So now what I've got down here at the final segment here is adding a label onto the chart, and that's up in that top left-hand corner. Trailing stop, and I'm plotting that label up the top left, and I'm specifying the color and the size of that label up at the top left, and I'm using that add label function. So now that I've got this, and I'll share it again. I've shared this once before, but let me share it again just so you can get it. Now that I've got this, I've just saved it, and I've saved it as trail stop select custom, just because I know that that's what it's telling me. So then what I did is I went to the chart, and let me just do this. So let me kill this real quick. And I went to my default chart. This is my default chart, and I clicked apply and OK. And once I've imported it and it's in my list, and remember, when you import that study, when you come up here to setup and you go to open shared item and you bring it in and you click on preview, name it what you want to name it right down here. So I'll name this imported trail stop. Demo. Imported trail stop demo, and I'll click on import. Now I'll bring that in, and now that's imported as a study. But you're right. Thanks, Wiley, for pointing that out. The study won't work in paper money as a function to mechanize the stop. You'd have to use the trailing stop function. So I'm going to go up here to the Flask icon. I'm going to type over here. We called it imported trail stop demo. And I just put it in here right now. And we can go to the gear icon. And now you can see that our trail type definition has two choices, dollar or percent. So we can choose dollar and we can choose a dollar amount. So I could say, hey, I want to trail this stop, the high close by $2.5, $2.50. Now I can choose here in that input, and I don't need to choose it by definition in writing the script because I can choose it here. I can choose that high. I can choose the midpoint. There's the midpoint calculation. You can choose any of these other specifications. We're going to leave it on the close. And then I've got that choice down here in terms of that trailing stop. So data is plotting that line. That's the blue line that's on the chart. I don't have to plot that. In fact, I can even just say, don't show the plot. So we'll take that off. I'm going to leave it on just so that we can see it. And then my next plot here is that trailing stop. I can adjust the curve. I can adjust the style of the curve. I can adjust the width of the curve. And then I can adjust the color of the curve on a dynamic basis. Now, if I wanted to go back in and I wanted to save the default as that, I could go back and save the default as those colors. So now I'm going to click on OK. We're going to click on apply and OK. And now you're seeing that price following. And this is kind of that where this is getting a little bit interesting. You see that price following that high close by $2.50. So here's the plot, that blue line of the high close, and this is $2.50 below. And it doesn't adjust except to adjust up when we get a new higher close. So if we were to go back, for instance, to our Flask icon, and I were to go to the gear icon, and I were to say, all right, let's adjust this by, say, $8. So we'll make that default $8. Click on OK and apply an OK. There's our line that is $8 off of the high close on an ongoing basis. Now, the great thing is, again, percentage. You can do this as a percentage. And that's the one that I was using when I first showed you this. And I said, all right, let's go to, say, for instance, let's go to 4% below. So we'll go to $1 and change that to percent, click on OK and apply an OK. And there's a trailing stop line that's 4% below that high close. And you can see where that level is right here. It's kind of going sideways, even though the price is coming down. It happens to be right at a support level that I've drawn in here, but you can see where that is. Now, I could maybe add some additions to that trailing stop and include what the definition is, what that label is, so that it shows you the percentage in terms of that amount. Now, here's where you could now put this into practical application. I know now that my 4% trailing stop is at 293.40. I could right click and I could create a buy custom with stop order. And I could place that order manually. I could place this as a trailing stop. And I could make this a percentage below. So I could say, fine, it minus 4% trailing stop. And that's going to trail the mark price in this case. So it's going to be a little bit off of that. So maybe that's something that we need to come back and adapt in our study, is allowing for the mark price. But that would be kind of the midpoint, I think, then in that particular case, but midpoint between the bid and the ask. And then we could make that good till cancel, click on confirm and send, and we'll go ahead and we'll fire that order off. And you can see where that trailing stop is. It's right about there. there's our trailing stop order in this particular case. So that's one way that you can go about writing and just adapting and walking through a trailing stop. Now you can flip it over. You're right, David, and use this for breakouts. That would be a good breakout study as well. All right. You guys have kind of exhausted the level of my current ThinkScript knowledge. So I want to just give you some additional resources. I know that you know where some of these are, but if you type in here ThinkScript, pop in ThinkScript into the Trader Talks webcast page, give us a follow by clicking on that subscribe button right there as well. You see James and Michael Fairborn. Michael Fairborn is the master at it. James is really good too, and a few others as well. So look forward to seeing you there. Click on that subscribe button, click on the search box and find that great information. Give us a thumbs up if you liked this webcast for sure. You can follow me on X at Ben Watson CS. You can follow James on X at James Boyd CS. And this will not automatically trigger the stop, but it will give you that line to confirm. Now, we can get more and more creative with this as we continue to play with it. I would encourage you to use this. Take this script. I have no claims on it. I built it, but go ahead and use it and build it the way you want to use it. Guys, thanks very much. My thanks to James Boyd, our great production staff, for helping me out with this today. And we will see you guys again very soon. Take care, everybody. Bye-bye.